So let's see. Hey, good morning, everyone. Welcome back to the rationalinvestor.co. This is our weekend offering, our broiler chicken show. And I think actually that's exactly the words that. Oh, we're live on YouTube. Hi, guys. Hi, YouTubers. And actually, I kind of like. I don't know whether I can do it mid-show. Actually, this would be interesting to see if I can do. I've never tried to do this. So if I blow the show up, I apologize, but I actually like disabling the chat over there on YouTube. So let's see what happens. I don't know whether the show dropped or not, but chat, live chat. All right. I don't know whether I'm still recording or not. I think I am. Anyway, let's see. Watch on you on watch page. All right. So, but yeah, okay. So the chat's gone now. And if you want to chat, just pop on over to the site, and I've got the chat room, so I can say, "Hi, everyone." So if you want to chat, just fire something into the lounge. I kind of like that actually because it works pretty well. We've gotten into the habit of doing that for the classes recently, and actually I think it works really well that we just sort of funnel all of the chat, because then that way I'm not looking at 20 different chats to try and figure out what's going on. But anyway, we got a few people in the lounge today, so if you feel like joining us in the actual hangout, feel free. I do see there's about a dozen or so people over on YouTube. So anyway, all right. As you can see on my screen, actually, what I did over the weekend, I was spending some time doing some CanSlim screens. And those people that took the level 1 course, is one of my favorite fundamental analysis tools. So I was having lots of fun looking at some really cool ideas. And I even tweeted out, I thought this was really cool. And this is really what should happen as we sort of transition into the next growth cycle. Is here's a company, they're in the medical services industry, they're record keepers, they're basically online, and they want to basically build a better mousetrap. Oh, hello. Maybe if you're in the lounge, you could throw yourself on mute. I'd appreciate it, guys. But a really interesting little company, MTBC, Medical Transcripts. And I even did up quite an extensive tweet on it yesterday. But long and short of it here is they have a really cool fundamental driver in that they're moving to the blockchain. Right? So they're actually going to be incorporating blockchain to try and increase profit margins. And that's the whole reason why, well, it's not the whole reason, but it is one direct application of a huge sort of segment of the crypto space that wanted to speak to sort of the medical services industry. And keeping better medical records on the blockchain, right, which would be totally secure. The customer themselves can actually control their data. So anyway, really interesting application of this idea. And in a weird sort of way, what I actually really like about this, hopefully everybody looks at this chart and says, well, okay, well, I can sort of see the cup and handle. But I also like the fact that, since they announced they were doing blockchain, and of course, if crypto catches a bit here, they'll probably get a little bit of tailwind from that. But you can see there's a really well-defined bullish bot setup that seems to be wanting to come in. Basically, there is sort of the lip of the cup. I mean, maybe it could be a bit higher. And you could even argue that this is also a cup and handle, right? We might even get a situation where you get like that, right? And you could say, well, Brian, I think that the cup and handle actually should go off of this high here. I mean, I wouldn't argue that with you. Something like that, right? But anyway, long and short of it here is I'm really interested to see how the bot sort of AB equals CD sets itself up to sort of get you in off of what appears to be a very important sort of pivot level for this stock. So I think I might just go buy 100 shares of this, throw it in my registered account. It'd be less than 1% of my portfolio. and just have some fun with this, because the bot definitely is there. And then, of course, if we break these lows, I'll hop off, take my lumps. I'll risk maybe, like what, 60, $70 on the trade. It's not bad. And what I love, and this is why I really like using these fundamental screens, is you get some, just, the funniest stock stories. And I mean, this one reads so pretty. Here was the write-up I did on Twitter. I'm a big fan of Can Slim, William O'Neill's growth model. Current earnings greater than 25% increase, they had a 53%. Annual earnings greater than 25%, they had 57%. New product or idea, well, they're taking the records to the next level, moving to the blockchain. Which I kind of like, it's a fun catalyst. Only 11 million shares out. That's cool. We can't really get market leadership data. Investors Business Daily, the newspaper that William O'Neill actually created to do this Can Slim model, they track that data. So I didn't put that in there, but low institutional participation. You can see institutions own 5.9%. That's not bad. And a friendly market. And I mean, let's call a spade a spade. S&P 500 is at new highs. And the yield curve has not inverted yet. So, that's about as friendly a market as you're going to get. So, what I find really interesting is insiders own half of the company. So there's only about 5 or 6 million shares out in the, in the float. It is interesting to see that there's a fairly high short ratio here. I mean, it's not huge, but, it's big enough that it catches my attention, which means that, if they do really run this stock, there could be a short squeeze. And I mean, I think everybody got a really good lesson in what short squeezes look like in that Tilray. That's a classic short squeeze. I mean, I wouldn't even be surprised if that little hedge fund, somebody said, you know what, we're going to punish this guy. And we're going to see, exactly what his uncle point is. But that's another conversation for another day. So, really interesting looking name here. Really, really interesting. I'm not going to bet the farm, but I definitely like the fact that I'm getting in. Now, you got to understand with these, we definitely call this like a micro cap stock, right? You have to appreciate that, because the float's fairly thin, there can be some fuckery, right? Notice there's a nice gap there. And if this thing breaks down, I'll just hop off. It's just that simple, guys. You can't fall in love with these ideas. But I really do like what I saw here, and I wanted to chat with you guys about it. So that's what I've been sort of doing through the weekend. And I guess what I was trying to point out, and it was interesting because the level oneers just had their course, their class today. And I heard, people asking, just very normal level one introductory questions. I'm sure you're all kind of still in shell shock, so it's completely understandable. But I really do like the idea. Now, I do think that there has to be a recession between now and then. And I think the market is still very blow off toppy. So I wouldn't be surprised if stocks do go to new highs. And, according to US presidential cycles, we could go through another nutso insano bull run here before the market fully breaks. Our number one tool for sort of predicting recessions is the yield curve. It has not inverted yet. We've spent lots of time in recent daily briefs and Broiler Chicken shows showing you that. So I'm not really looking for the big crash. I wouldn't be surprised if there's a technical pullback. That wouldn't surprise me at all. And I do see what's really interesting, I've got a short trade on in the NASDAQ. What I do find interesting is that this might actually be sort of a tide shift rather than an outright, broader market collapse with social media and the way that social media is acting of late. I suppose if we see those earning numbers continue to disappoint, right? The proof of the pudding's in the eating, then yeah, we could see, it's not necessarily like the market's going into recession, but tech maybe just take a breather because some of these FANG stocks need to come back down to earth. But we'll see. Only time will tell. the point here is I absolutely love this kind of investment philosophy for sort of the next like 15 to 20 years. But I do believe that there's needs to be a recession between now and when we get into that ultimate growth phase of our society. I like this kind of idea as sort of a trade as the market's going along, but I wouldn't be surprised if kind of like what you everybody just saw in altcoins, that there's a big shakeout in the stock market before we really set a base for the next cycle. But it was really interesting. I was even chatting in the lounge this morning when I got up this morning, just talking about sort of long-term cycles, and you know, I, it actually might be a fun project. I don't know whether I can still do it here, but why don't we try? Um, probably about a year ago now. I guess it's been that long. I guess I haven't talked to you guys too much about it. But I've made the argument that gold as a fear asset proxy should peak into this cycle. 17 and a half year cycle. It didn't happen, but something else did go absolutely insane into that cycle peak window, and that, of course, Bitcoin. Everybody remembers that. And the other side of that is that those markets need to take some time to cool down, and you should be able, like, I maybe I can show you later on that XLM lumens chart, but I think there's going to be a lot of big winners in this space, and it doesn't necessarily have to be Bitcoin itself. And that's sort of why I like the nice big fat diversified portfolio, because you never really know who's going to be the ultimate winner here. I was kind of hoping I just had the chart handy, but I don't see it. Gold. I had gold. Oh, maybe this is it. Gold versus Bitcoin. Well, we'll take a chance. Survey says. Nope, this doesn't look like it. But anyway. No, that's not what I wanted. I was kind of hoping in the level 1 course I could make reference to that today to help you guys. But I did a tweet a while ago showing sort of the correlation between the U.S. dollar, and if any of you guys happen to have it offhand, and this is where you hit Brian 1.5 speed or 2 times speed. Just wait for him to get his shit together, and then I'll start talking charts. So just bear. In fact, this is where we need to have the funny sort of interlude music, the lobby music. Do 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 do. What do you guys, Joshua? You want to find like a soundtrack of elevator music? We interrupt this presentation to give you a trip to the lobby. Let's all go to the lobby. No? Nobody's got a sense of humor this morning. You guys are dead. What's going on here? Anybody in the lounge? Isn't that funny? I guess maybe the YouTubers got kind of pissed off that I took the chat away from there. All right. Anyway, I was kind of hoping, and what the hell did I call it? Maybe inflation? BTC, maybe this is it. Please, 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 please. Oh, this looks like we could be. Yay! All right, cool. Okay, so this makes sense now. Yeah, what the hell was I talking about? Can't even remember. Anyway, long-term cycles, the gold, and then I suppose why don't we just for reference sake, why don't we throw on the breadth? I think it's the breadth charts so we can see what they're doing right now. There we go, Dow gold ratio. Okay, so we made the argument, long-term cycle basis that, this was the last sort of fear cycle apex, 1980. And this was the dot-com boom apex. And the question ultimately was, what was this fear cycle's apex looking? And it's fascinating, right? Because here you can see this is 2013. We put in a major low 2008 financial asset crisis. Rah, 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 rah. And then along comes this crazy ass thing called Bitcoin, right? And so gold has never really outperformed relative to stocks through this period because, and hopefully all of you can see this, I mean, it's quite shocking. Basically when the US dollar, and that's the dark green here, when it doubles use, right, it's bottoms. That means the value of money technically is going up. So things like commodities that basically want to keep their same value in fiat terms, if you will, have to go down. So you can, hopefully everybody can see that W, the M, the high correlation. This was in a world before Bitcoin. US dollar has monster rally, gold totally tanks. And of course, this was sort of, all through sort of, especially at this point, right, dilution of the US dollar. And, is the US dollar, itself under attack? The world economy sort of came into big question, right? And then you could argue, and really, that's the irony of it all, is that gold is really a great sort of growth proxy, because you can't have inflation if you have no growth. If you have recession or regression, that will lead to deflation, not inflation. And so really that was sort of what this message was, through the efforts of, Mr. Bernanke, helicopter money, and Janet Yellen continuing on the theme, quantitative easing, whatever. I think they sort of slayed the deflationary beast. And in that environment, as this sort of US dollar fear breaks and we start to come back to inflation, what we should have seen is the gold price really take off here, right? That's historically what should have happened. But something else came along and gobbled up all that purchasing power. And I hope you guys can see this. I mean, that's really what should have happened through that cycle peak. And the irony of it all is that what I think has to end up happening as we go down the road is I used to have on the Dow Commodity Index. Let's just see. Well, actually, maybe let's even go commodity. Let's go over here. Dow Jones Commodity Index. And the interesting thing about this was that, let's see if it's going to correlate. It stopped working for a while. And actually, there may be, I don't know whether it's, okay. I guess that's this line, eh? Now, the interesting thing about this is you can see that the commodity index actually did outperform. But the interesting thing is, and do you guys all remember this? Doug Casey's getting all angry at bit, because nobody's in there buying his gold. But the interesting thing is the commodities have outperformed here nicely. And I have made the argument that at some point, Bitcoin should actually will be, and the worst part about it is they'll go back and they'll backdate it and all that stuff. And this chart data will change, but I'll argue at some point that Bitcoin will be sort of included into these commodity indexes. And then you're going to see when we look back in hindsight, oh my God, yeah, that was an absolute insane spike in commodities. But, the sad thing for the course, and really, it's probably in your guys' best interest. Where should I do this? Dow gold cycle. I don't know whether that'll spit up what we're trying to show you here. This is the image that I show you in the course material. If we ultimately have bottomed sort of along this channel, and that's at like 5, 6, 7 times, right? You can see here's 5, 6, there's 5, here's 9. So if we ultimately find that our bottom was within sort of this area on the channel, Relative to gold, in the case we go back here and we say, okay, well, relative to gold, what the hell's that damn chart? Here we are. Our low ultimately was 5, right? So there you go. That low was 5.83. So if we go back to that funny looking chart, right? This high right here, that's 5.8 there. So what that means is that maybe this Dow gold cycle will pivot right off of this level. I would make the argument that it would have been more personified, and we probably would again gotten a bigger dump had it not been for this crazy ass thing called Bitcoin that I would make the argument just basically ate gold's lunch through this rally. Now, I would also argue too, and I think this is important for the level oneers to understand, is that this is actually a very long-term significant cycle peak and pivot in my eyes. This is a pretty big event that we went through. And, in a weird sort of way, and this is maybe a bit of rhetoric, but I remember, we have a level 3er now who's going to be rocking derivatives. And I used to joke with him all last year. And I used to joke with people all the time, going way, way back, that, what I want to do as of sort of January 1st, 2018 is go and buy Hawaiian real estate. And I find it fascinating because I said this for years and years and years. I find it fascinating that, nobody wants to buy Hawaiian real estate, right? They got the, not only is, like they're sort of crypto unfriendly, but they've got, horrible volcano issues, and now they've got hurricane issues. I mean, it's just a nightmare right now in Hawaii. So how ironic. It's, I find that rather amusing. So talk about buying when they're crying. It's almost like going and buying Puerto Rico, I suppose, in the midst of their storms too. And actually, I think Puerto Rico uses the US dollar, don't they? So in a weird sort of way, there's actually a lot of similarities. Maybe Puerto Rico's another way to sneak in to the US real estate market. But anyway, I've made the argument for quite some time, and I kind of have to, and this is sort of along, and where am I going with all of this? This is sort of along that sort of thinking of that stock, right? And this is, it's a US company. I really wouldn't mind having, dollars at work in growth sectors denominated in US dollars right now in a weird sort of way. And that has to happen for like the next, I mean, you guys all took the course. I mean, I look back in hindsight, and frankly, I'm actually shocked at how violent this all played out, almost exactly on cue to this whole cycle theory. I sit there in bed and go, I can't believe it. Because, if I had really bought the story subconsciously, and Julian, of course, he wanted us to be selling everything under the sun, and hats off to him. I think it was really educational for me to watch how he picked up on the trend change in Bitcoin. But I look back and I'm astounded at how accurate that goddamn cycle was. It kills me. So anyway, that's a bit of it's a bit of rhetoric, bit of hindsight, whatever. Not really much you can do about it now. And for the level oneers, I just want you to appreciate how significant I think this long-term, actually that's not the chart I want. Actually, maybe it's not a bad idea. I do have this chart up here, right? Because if we look at gold, and actually maybe let's go and take a look at this. Here is, and you can see all the levels I've drawn out on the gold chart. This was 1980s gold peak. And, I have 4 charts on here, so we'll keep that in mind. I don't know whether I can do these side by side or not. Okay, so there is the gold, and now let's put Bitcoin, and let's sort of complete the same scale. It's interesting to see how we never did get this violent rally back up into reload short zones on Bitcoin. It just never developed. So, at best, and I think you can see the double top here. Yeah, you can see the double top. It was a muted counter trend rally, but nonetheless a failure. But I'm a little bit surprised at how shallow the counter trend rally has been on Bitcoin. So maybe, and you can even see, I sort of did sort of similar time analysis, I guess something along those lines. And you can see that, yeah, something like that. You can see that if we had followed gold's path, we should have rallied up into that reload zone. And if in a weird sort of way, actually, this is kind of good that this has played out this way. Because what I think it does is, in this kind of a market, the market was still very frothy. And in a weird sort of way, we say institutions can only sell up markets. And of course, if they are going to be, and keep in mind, these are long-term charts, right? So if they are going to be long-term sellers, can you guys see how that was just an absolutely beautiful window that they engineered to basically cement the top in the market? So by us not doing that path, this actually is encouraging to me. We've broken this model. So that's good. Now, I think we could also make the argument too that because of Bitcoin's mechanics, the halvening events, etc., that it's not the same assets, right? This will have to rise over time. So the price won't follow this same path, right? An ounce of gold here is exactly the same as an ounce of gold here, whereas a Bitcoin here is not the same as a mined Bitcoin here. That's probably the important word, mined, right? I do think, guys, I mean, no offense, and we've talked lots about this. I do think that this, where is the cost of production? I think that has to be sort of our ultimate barometer. And I think that ultimately value is nothing more than the market worried that too few miners are in the space to validate the network correctly, a la 51% attack worries. So if we actually started hearing about that kind of talk, I would believe that we're very near a bottom and we have to get the price up because we have to get more participants mining in the market at a profit. And the easiest way to do that is to rally the price. It seems to me, especially if we look left, actually in this chart, it's so simple. And yet, it's shocking when you look back in hindsight, right? But look left, I don't think it really should surprise us if we just draw a line off of that level there. Doink. That's definitely got to be key support. And actually the level 2ers, you're going to be doing this shortly, right? We call this horizontal support and resistance. Tricking out our charts, right? If we start drawing like key support lines, let's just make sure these are crisp. And this one you can see I think is pretty important because not only does it have a key railroad tracks high, but it also has this key tail low. Let's just make sure that's on there. And there. All right, so something in that area there. And we've talked lots about, like what I've heard, and I tweeted it out recently, is that there is there's a miner that recently went public with numbers, and he said his cost of production was about 2,000 or 3,000. So I definitely think that this is definitely doable. And I've talked lots in recent videos and site messages and stuff about how I ultimately think that this is probably where we're going down the road. Which kind of sucks, for the bulls, because I know you guys want this to be a bull market. We typically say that bear markets are about 18 months in duration. So this is a weekly chart. That means 52 weeks is 1 year. Boom. And that means that 77 weeks is that 18 months. So that puts us about there. The good part about it is, of course, that's probably when we emerge out of the mess. And the cool part about it is I think we're actually planning on having our TRI meetup in Vancouver just about this time next year. So, and it will be a testament how many of you can show up to that meetup. Are you serious about this thing still being in this thing called Bitcoin? That's going to be a really interesting testament. Only 3 people show up. Oh, that's not good. I suppose you could, and this isn't like reinventing the wheel. You guys have seen me do this time and time in the past. And I kind of like to just do the same thing over and over and over again. So that way you guys, you're not sugar-coated. You know exactly what to expect. So there was 77 weeks from the last peak, right? And that put us sort of right in here. And I would imagine, if we have to follow this kind of course, I would imagine a lot of you are going to be very, very stressed out about Bitcoin and crypto. But we'll see what happens. Only time will tell. The good part about it is I do think that there are sort of seasonal windows where you get cute little rally windows and opportunities, especially even within bears. And I get the feeling we're entering one of those. You guys remember back in the winter time? And I remember I said this in November and December, and it was true with the alts. They had a nice little rally. I remember last fall we had Michael come on. Do you guys remember that? I think he told us about lumens then. And that produced a hell of a winner for everybody. That was back last sort of September, October, before Bitcoin went crazy there. And then, of course, you guys know 420. Have you guys ever heard me talk about 420 before? And actually, you know what? Probably not a bad sort of reference. Oh, geez, and I don't know how long ago it was. Well, let's see if I can find it. I know you're around here somewhere. It was, yeah, I think this is it. Yeah. Well, it did though. There were some rallies. I mean, keep in mind this was in the hangover year. So Alex says, yeah, it didn't work this year. There were a few rallies. I mean, it wasn't broad-based face rip. It was kind of a shitty market, but there were some coins that did pretty well through that window. And that's kind of what I'm thinking. I'm seeing the same thing here. The reason why I pull this up is I just sort of like to ask, now I did this as of September 8th. Now we're about a week or two later. So we're sort of moving along this sort of timestamp. I noticed, in this particular year, Bitcoin bottomed in October. And then another dip into sort of November, and then finished the year strong. In this particular year, crypto was relatively okay, but had to take a dip into November. And this is what I'm worried about, right? Is this dip. The end of October into November. I've seen this happen before. Even just on this little one, there was a bit of a spike down that washed people out. I don't know how violent it was. There was also, I suppose, this one that came later on in September, October. In the last sort of sell-off year in earnest that I sort of consider the same as this year. September sort of doing okay, but then, we dumped into October, then had a counter trend rally. And this is kind of what I'm thinking we're in right now. What I'm worried about is that, again, sort of just like this, well, not really this year. Which one was it? I guess, well, sort of. But what I'm worried about is we head into sort of November-ish. Everybody's like, okay, the bottom's in, and we have one more dump into the end of the year. I've seen that happen a few times now. So, we'll see how this goes. It's nice to see that Bitcoin, tested these lows. Even now we can see. Is this turn into this kind of thing where we tested the lows, a little bit of a bounce and then dump? I don't know. Trade your setups and all that kind of stuff, right? But I suppose we can go down to lower time frame in a bit, but I suppose just to finish off sort of this weekly chart that we were looking at. There's sort of the ultimate sort of expression of the duration of this bear. This is what they say is the average. Average is 18 months, but that doesn't mean it's guaranteed. We'll just keep our fingers crossed. You can see horizontal support and resistance if we do have to break down. Seems logical to me There could be a nice little FU against all these lows, dumping into these horizontal support and resistance levels. If we lose that, then you can clearly see the next shot down here is down into that sort of 3,000 area. And I think it's at this point, ultimately, that we start hearing about most of the miners are out of business. We're worried about 51% attack kind of conversations again. I think that has to happen through this kind of price window. That's just my opinion. In the shorter time period, and this is kind of why it's good to look at the weekly charts. It sort of slows you down. I think we're still playing off of this key support line. You've heard Brian say before. Whoa, hello, Sarah. Hello, Sarah. Gonna have to put you on mute there, Slick. Thank you. You've heard us talk about this before. Wicks and tails, like to get eaten, but candle bodies are just sick ass trade levels. And, this is a weekly chart. So this is a pretty significant weekly pivot level right in there. And of course, that produced, this insane long trade idea. That's it. I'm not going to say that's easy by any stretch. This was our first inverted head and shoulders off the dailies. And this was sort of my, the markets rallied off of the lows, feeling pretty optimistic. And then the rally just completely stalled on a fairly well-defined M top, ironically enough, off the dailies again. And then, my European vacation trip sort of started here. And as literally getting on the airplane here, rah, 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 everybody's feeling optimistic. And then by the time I get back, right back down into the shitter. It's interesting that we tested these lows, and it goes again, candle body lows, sick ass trade levels. But I gotta say, and we remember David Davis on the in the lounge posted articles about how it seemed like this was, and this is something that I think it's important for us to acknowledge too. Was this happen? I've seen market dump here now pretty regularly on Mondays. I don't know what it is about Bitcoin and Mondays, but sort of Goldman Sachs comes back. They bid the market up into the weekend. Get the market feeling somewhat optimistic, and then the big boys open up Monday morning and then just crap on it. And as I said, David Davis had put out an article on the site saying that there might have even been some shenanigans going on around that event. It came down very quickly, which is interesting. I watched a really cool YouTube video that I haven't watched in years. Somebody, I think it was in the level 2 group, posted it. And this is why, 1 + 1 = 3. I'm not here to say that trade like Brian. Brian has all the secrets. You do what Brian says, you're going to win. Really, most of the stuff that I teach you guys is pretty universal in the market. And there's 100 different ways to skin this cat. I mean, there's probably a million different ways. But on balance, everybody's message should be generally the same. And I thought it was really cool. I'll just show you in the level 2 group. They're all sort of working together to help each other out. And somebody posted a video. And I actually used to trade with this guy, Dante. he worked at the same prop firm that he makes reference to here, which I found hilarious. I used to know this guy. I used to trade with him. But anyway, he did a video in 2014. I mean, again, very for those that are faint to the heart of the language, probably best to pass on this video. I mean, he's very colorful speaker. Let's put it that way. But excellent video. And really all the stuff that I teach you here at TRI is basically the same thing he's trying to teach you here. I don't know whether he's a big fan of PMA though. But nonetheless, he's a very good trader. And this was a video from 2014. A very candid, very straight, very typical sort of trader talk. maybe if I, that's kind of a tease to everybody else. I'm sorry, guys. Let's go open a new tab. Okay, so there it is. And you can see I was listening away to it last night. There is the link. I'll throw this in the lounge. Really, and it can't hurt to continually add to your knowledge base. Like I said, nobody's got sort of like a copyright on this information, how to succeed at trading, right? And what you're probably going to see on the internet and stuff is a whole bunch of sort of variations of the same things that I'm trying to teach you guys, right? Trade location tools, divergence tools, structure tools, go. Steve says, I watched it. Wow, an eye-opener. He's definitely a character, right? But anyway, so the point that I'm trying to make here is I would actually argue that this is sort of like a trader's trade location. Remember we talked about candle body lows? And actually, I even tweeted out a chart the other day, which is sort of along those same lines. That, it's a trader's trade kind of traders, trade. Where the hell was it? It was such a sick-ass chart. Somewhere in all this mess. Was that it? I don't think that was it. Yeah, this one. There's 100 different ways to skin a cat. And what's the cool thing that we do at TRI is we try to teach you week after week, module after module, all the various different ways that you can build setups. And there's a million different ways to trade the market. And, in the library, it's probably important for you guys just to have a quick refresher here. In the library, we happen to list a bunch of the setups that we've just built with the students over the years. And, feel free to explore any one of these setups. Where the hell is it? Oh, yeah, setups. It's got the whole section. And, go through, what is a setup and, different trading management strategies and building technical setups from aggressive to conservative. And then, a whole bunch of different ways. These are setups on the site that I like to trade. And, you notice a lot of them we use, references to actual students. The reason why I call this the El Tangonator is it's named after Sebastian. And he's in Argentina. He is our El Tangonator, right? Dun, 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 dun. Ole! Hollywood Nick. He was a guy whose name happened to be Nick, and guess where he lived? In Hollywood. So these just so happen to be setups that we built on the site through the school program, and it's fun. This is what I like to do. It makes Brian happy. Are you going to find these name references to these setups on the internet? No. They're just all setups that we built at TRI. Do they work? Yeah. I mean, fuck, some of these setups are just brilliant. And I noticed, like Alex, you're a pretty big fan of El Tangonator, and he's there in Germany. I try singing that flamenco song in German. Anyway, yeah. So, I mean, you can put your own spin on them with their various different tools. So the point that I'm trying to make here is that there's a million different ways to skin the cat. We really want to try and build setups, right? Define your reasons for acting, and then just simply get in there and trade. In fact, I convey this to the public, right? Find 3 reasons. Here we've got just a great trade location tool, the reload zone. There's a million different names for this. It was funny. I saw a guy actually make reference to another guy's reference to 70.5 and said that was the midpoint between these points. And the irony of it all is that mathematically is actually incorrect. So it's so funny watching all the different references to these different levels on the net. But oh well, here nor there. The point of the matter is if you want to just break it down to the fibs, 61.8, 78.6 is a pretty good area to go hunting for trade location. We've all seen, of course, Ian and his Leprechavark, 88.6. You want to use 88.6, great, but you can see in this particular case, she never got down to 88.6. our traders trade, and that's what I really wanted to show you off of this tweet is, those people that are more advanced and that can actually take the anxiety of just buying levels, which is extremely difficult. I'm not going to sugarcoat it, people. This isn't easy trading at all. Damn. And as an example of that sort of candle body level, I mean, maybe you could say, well, if it's at or near a reload zone, I'll just put my bid at the candle bodies. Okay, well, fine. You can see how well that worked here. And that's sort of the reference that I was making with regard to Bitcoin, in that you can see, candle body low as trade location, damn. And then, off of that tag, maybe that's a little violent for you to take, but you say, okay, well, candle body low off a trade location, damn, right? That gets you long here. And then the same thing just happened here, right? Bang. And maybe, you had your bid. I don't know whether, let's see, what is this close? The close there is, and this is Finex. Of course, all your different exchanges will be appropriate. 61.48, 61.48.10. So let's see, 61 even. So yeah, you could have gotten a fill off the candle body close level there as well. I was feeling super optimistic last week when I saw this inside bar paint, but the problem is that this candle's actually negated that pattern with this move to new lows here. It's great to see that it's an up candle, but this is a lower low. So as a result, the absolute best that we can say here is that maybe there's a new W forming off of a break of this high. So that's 71, let's call it 71.30. I think it's, what does that say? Maybe 71, beg your pardon, 74.29.20. Let's be a little more specific. Yeah, 74.29.20. So, and I know a lot of people like to 74.29.2, right? I know a lot of people like to use Finex as sort of a reference, 74.29.20. So my hunch is that's probably a very important number for all of us to keep in mind. Because these tails are lower than these tails, I'm okay with this being a double bottom, but I fully acknowledge that this low, we change this to a closed line. Oops, that's not what I wanted. You can see that this is going to be a sloppy bottom. You can't see the screen? Sarah, where's Sarah? We can't see the screen. Uh-oh. And remember to wear pants. Who can't see the screen? How do I do that? Do I go all the way to there? What happens? Nope, that didn't work. How do you fast forward to actual like real time on YouTube? Is there a way to do that? Oh yeah, well, it looks like it's fine. Looks okay. Works for me. Click on Brian. You are screen sharing and presenting to everyone. Click the live. Oh, there's a live button. Live. Is it live or is it Memorex? Thanks, Josh. Live. Oh, there it is. Click. All right. So boogada boogada boogada. All right. So boogada boogada boogada. There's the delay. All right. Well, that was fun. Okay, it looks like we're hanging in there. Hey, and you're over here too. Oh, that's a cool picture, Sarah. Don't get chomped. Okay, so what do we got here? We got off of the clothesline basis. This isn't even a W yet. What sucks is off of a clothesline basis for us to actually get a buy signal, we have to actually close all the way up there, right? So down, up, down, higher close. So there is still a lot of work to do here, guys. And it wouldn't surprise me that we actually get a pretty substantial rally through here. So the sentiment in the space is so negative. Maybe we need to just get people a little bit more optimistic. Like I said, off of that tweet, I don't know if I can find this again. It might not work. Nope, it's not going to work. Fudge. I should have probably loaded it as a new image, eh? Anyway, how far back was that? Sad dog doing the dishes. So anyway, I'm just having fun. This is another one of those 1.5 or 2 times speed. There we go. This was the image. Yeah, let's open this one. That's actually a pretty good image to keep. Yeah, could we dump some more here after sort of our little seasonal rally off the lows? There was a little bit one here in September, October, but then a dump here. I see there's actually this one was relatively muted. One a little bit of a pullback, nothing to get too excited. And of course, this is when the market started to go crazy. And now here we're in hangover, and oh boy, big dump into the end of the year, couple dumps. So, I'm getting the feeling like, the market maybe needs to just back up here a little bit. Technically speaking, I just don't think we have enough to justify a long-term bottom in the market just yet. And, when we talk about cost of production, we're still pretty expensive. That's just sort of the way it is off the higher time frames. There's no point in sugarcoating it, guys. If this thing can W out here, then we can start feeling as though, and really, as we said, this is sort of that weekly close that we got to see, and it's way up at 8,200. If we can close up there, the difference between 6,700 and 8,200 isn't that big. If we're going to 50 grand, you're going to look back and go, gee whiz, why was I quibbling over a grand or two? So, that's sort of the long-term trend kind of idea. What I'd love to see, would be so cool, would be to see this market come up, break out through here, come back up, test this high, then fail, come back down, test these lows, and do sort of a chop like that. That would be an awesome saucer bottom. So you want to call your buddies? Just get this market to pop up through 74.29. I think if you can do that, there should be a pretty good shot up at this 81, 8,200 area. So those are probably the levels. If anybody's, I don't know whether Joshua was around earlier. He takes just meticulous notes. But this, I think, is a really, really good, just simple guide. 81, 84, 29. We're kind of working off the weekly chart. So why don't we just say a weekly close? And what a coincidence. Isn't that interesting? That's right on 7,300. So let's get, first off, a nice weekly close above 7,300. Nice sort of intraday or intra candle spikes up to 74, 30, 40. Take out those highs, please. Then your next sort of key reference point off these weekly charts, 82.21. And again, interesting how that's a fairly round number there, right? 82.21. So off the weekly basis, I think those are two massive resistance levels. And, off the daily charts, we probably see what these peaks are for your specific short-term resistance. So higher time frame still pointing down, trying to turn, but sloppy ass turn. The fact that they took these lows out just by a few bucks and then ramped it up, sloppy. It's not our nice clean bottom we'd like to see. Could this be a range setup here? Totally. And if anything, because this was a new low, maybe this is a diamond pattern. What I actually am kind of thinking is if we change this to sort of like a daily chart, I think actually this looks like a megaphone. So off the dailies, kind of thinking boom, 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 boom. Which I kind of like, right? Because, wicks and tails like to be eaten. If we start thinking candle body lows as trade location, that paints a trade location there. And if we do reload zones, my hunch is that's probably, 78.6-ish. Isn't that crazy when that shit happens? Oh, Jesus. Drives you nuts. So, you could see a really quick stab into this level. Wicks and tails like to be eaten. Right? A lot of unfinished business there. 78.6. Love that as a trade location. I just don't know whether this is the top, because if we go down to, say, like a 4-hour, I don't know whether we have a divergence in here yet. All right, so there is that sort of megaphone kind of thinking. And it's a sloppy megaphone, eh? Really sloppy. What's worse is, and I don't want to conjecture that because that looks too steep. But actually, megaphone traders, this is actually exactly what they look for. 3 tags of the megaphone, market structure signal, and this becomes a massive sell level there. Right. And if anything, this is another really good testament to sort of like Thomas's thinking of the clothesline levels. I could very easily see sort of like a stab lower, stab, right? And then it'll come back up and then it'll kiss this level, right, and give you some sort of trade like that and then dump. That wouldn't surprise me one bit. And we used to have a guy on the site, Greg Pop. He was from, I don't know where he was from. Somewhere in Eastern Europe, I think. But anyway, he used to love this megaphone setup, right? And if we sort of use that as a profit objective, the megaphone guys are looking for down to here. And the only, actually, this one is a little bit weak because usually the megaphones, right, look like megaphones, right? Which means that their downtrend line is something like that. And then that sets up just a phenomenal sort of trade into things like Mountain Man level, gives you just, beautiful risk reward. This is pretty sloppy in here, so I wouldn't call this a textbook megaphone, but nonetheless. And actually, I did see somebody posting the Blukowski site. Again, this is a great thing that I see happening on the site. All the students are sort of working together. I don't know whether it was a level 2 or it was a level 3 program. Somebody was posting the Q. Where are we here? Is it over here? Oh yeah, you guys were posting the Mark Douglas videos. Okay, so it must have been the level 3 guys. Oh no, I don't see it in there. Anyway, somebody was posting the Blukowski. What the heck was that? Anyway, if somebody happens to have it handy, wow, what the hell? How about Brian? Oh, don't find it. Where is the site? Here we are. And now, where on earth would I have it? Hmm. Hmm. Oh god, I can never remember. Probably somewhere in here. I think it's called the chart pattern site. Chart patterns. Maybe this is it. Nope, that's not it. But by all means, have some fun checking all these out. It's in here somewhere. Anyway, the pattern site, maybe this is it. There it is. Bulkowski. So, what did we say the name was? I think he calls it an expanding wedge. I think that's what it is. Extending, broadening wedge. I guess he calls them broadening wedge. Visual index. There we go. So it's probably in here somewhere. Broadening. Oh, okay. Anyway, so have some fun in here if you want to read up on the expanding wedge. But there was a guy on our site who absolutely loved this setup. It's tricky. Don't get me wrong. It's more advanced than I really like, the very beginners to trading to concentrate on, because it is, it's very fast. It can be extremely violent. I like these kind of trades, nice and slow and steady. Grandma, right? Hopefully you can see the beautiful W's in here, right? That's the kind of trade, sort of Brian driving his old 1920s car. The expanding wedge is an extremely fast setup. Anyway, the point of the matter here is you can sort of see it playing out. Short that M, look to take profits on a test of the bottom of the wedge. Right? So that's kind of what I see happening here over the short term. The only problem that I have here is, did this set up on a divergence? Brian loves to have his divergences to sort of set up the trade. And that sort of takes us to the kind of analysis that I posted on the site this morning. Question ultimately is, where the heck are those charts? Right, so I posted this on the chart this morning, or on the site this morning, and I think actually I did off 4 hours long. For Thomas's sake, I did OK Coin this morning. I think I also mapped out MEX as well. So we can look at those levels. I guess probably the easiest way to start off with the daily chart is, you guys remember this conversation. It was really encouraging to see the market break out through the top here. A lot of these levels are still very active, though. So we'd actually have to go and break out through the top here to negate this one, right? To negate this AB equals CD, we have to go and take out this high. To negate this big orange one, right, we got to go take out this high. So they're still floating out there. This most recent little red one, it got broken, that high that we were worried about there. So the new high, I've drawn that off of that level there. And so that's that level now there, which is interesting because it lines up nicely with the 113 there. But I put out a tweet recently saying, about $400 or $500 really defines our trading range right now. And I think that really still is the case. We got a little bit of a head fake on one side of the range. That was this move down here, total head fake. Can we get everybody going short? Nope. All right, take it right back to the trend line and almost exactly midpoint of this range. And then, okay, let's try the other side of the range. They broke it out through the top. And you guys hopefully can see that, on a daily basis, what we might do is form a cute little fractal up here. Can everybody see the fractal? And what we really don't want to see, I don't know, can anybody see the potential fractal coming in here? Anyone? I don't know. Anybody still watching me? Probably just talking to myself. Where are we here? Where's the lounge? Yeah, I see it. Oh, Josh sees it. That's cool. Hi, Josh. Maybe even Empire. Very good, Alex, right? So hopefully you guys can also see, if we lose this level in earnest, then probably got to head right back down to there, right? Last sort of even traffic area. Is that candle body close there? And that might set up Alex's empire. Dun, 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 dun. Dun, 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 dun. All right. So anyway, the point of the matter here is we painted that Phoenix level, candle bodies, wicks, and tails like to be eaten. We did actually take out the lows there. So in essence, this is now an expanding wedge. It's no longer a rectangle. In fact, actually, we should probably change this now to reflect that. And we showed you Greg Pop's expanding wedge. Actually, I'm not quite sure. Maybe we take it off that high. I'm not sure. That's a tough one. Let's just do it like here to here. Maybe we actually have to go off of that high. I don't know. That's a tough one. Oh, now I'm sounding redundant. Right, then there to there. Right, so off into there. That's sort of the playground that we have right now. And if we do fail here and we fractal here, don't be shocked if we have to come right back down into that tail. And as I said before, I love this candle body lows. Seems to be just a sick ass, excuse me, trade location. So, considering it's the starting of the week coming up here, I actually do kind of like the idea of a nice little empire here set up for them Monday, Tuesday, just out of the blue. We get that big old, maybe the empire looks something like that, right? We get a big old dump that just fires like lightning straight down into these levels, gets all the crypto kids just shitting their pants, but they actually are setting up a buy window for the Tuesday, Wednesday kill zone. What do you think, guys? Does that kind of make sense? That's sort of what I'm seeing here. Feels like it. You're setting your bids already, eh? Man, I love that level there. That level is just sick. And what's interesting is I did see a bunch of sort of the pros, the Twitter OGs and all that were going, all right, I'm loaded up, but they're not loaded up here, right? The market already popped when they go and post all their tweets about how they're loaded up, but they said that they were loaded up, and specifically, I seem to remember the guy saying about 62, 6,300. Let's go back to that Phoenix chart and see if that sort of lines up with what he was saying. So off of Phoenix, more like cash price. Yeah, you can see 6,200. And then that was that sort of candle body lows level right in there. I think that was in that area, 6,250 area. There is the reload. Oh, actually, no, that's not correct, right? Yeah, so there we go, 62.58, right in. I really like sort of right in against all these levels. See that funny little tail? I mean, geez, this looks like an altcoin. It's the same shit as we do every day with these altcoins. And of course, big old wicks and tails, wicks to be eaten. So I guess that's what I'm sort of thinking. And if anything, sort of a scenario, let's, just for fun, we'll keep this chart on the screen. Let's see, squiggly line theory for the win. Let's see how this plays out. I got a funny feeling it's going to look something like this. Setting up the actual trade, though, don't think we actually have the divergences in here yet. That's one thing that sort of got me on pause, just about getting too aggressively short just yet, is and these are the charts that I sort of posted in the lounge this morning. We had this big burst, huge volume burst there, right? That's up to there. And then I was posting other places, this was a nice AB equals CD, and that was almost a perfect target tag of that AB equals CD. Where's that flagpole chart? I did a really cool flagpole chart, but I don't seem to have it. Oh, maybe this was it. Nope. Oh, well. Anyway, on one of these charts, maybe it was over here. Oh, here it is. So that was that big spike. Haboosh, right? Consolidation, AB equals CD, almost a perfect target tag. I mean, that's ridiculous when that happens. I hate when that happens. And you remember on Friday's video, right? I think I even said, okay, squiggly line theory, we should go sideways now and sort of set up the next leg. I don't like the fact that off of the hourly charts, this big ass divergence. And this is kind of a funny one because they just went up just a little bit higher than that. And I know some of you are going to go, well, Brian, that's not a divergence. But notice that right off of that high, look at that damn double top there. Bang, bang, bang. And sometimes MACD does that, right? And I love it when students show me, there's two different ways to trade this MACD. You can trade off of the bigger message, right? Oh, fail. See you later. Huge fail. And you can also be hunting for the little fails, right? And like if you're hunting, like say, like you're a day trader or swing trader, right? Look at this cute little top right there, boosh, and this cute little bottom right there, right? Awesome stuff. Based off of this McAdoo. The reason why I didn't really think about getting too bearish, even though, harmonic level was hit. And I suppose, for those harmonic traders, you could argue there is your cute little squiggly. So that's setting up a divergence here. And you can see how that basically, this rally to new highs was nowhere near that. I mean, it's just miles away, total divergence, right at that harmonic objective, jerks. So you could argue that the market had set up a short here. And I think I remember on Friday's video that we did on the site, I even said something to that effect. I seem to remember saying I can understand the aggressive guys hunting shorts up here. I think that makes perfect sense. And I had sort of said that, because the higher time frames were trying to turn up, although I really don't like the look of the higher time frame charts right now to like set super bullish. But because they were sort of pointing up, I did like the idea of us waiting for a consolidation to maybe set up a bot. So I think, heading into, Friday session and the Saturday session, and there was a bit of a dump here. So squiggly line theory, I can make the argument that's sort of played along those lines. We have got 33, but geez, it sure wasn't enough to get me too excited. And I really don't like the look of this. This sure looks messy, and especially if we look at it on OKCoin. Where is my OKCoin? I think I went the wrong direction. Yeah, there we go. What I'm sort of seeing is on OKCoin, we never did get that big dump, but I'm not sure if that might have been off of that level there. I don't think that includes, is it? Yeah, actually it does include it. Oh, interesting. So Phoenix cash market did have the dump that hit that 33%. But OKCoin never did. So, I'm sitting on the fence here right now. I certainly don't have any buy setups. And what I see here on the charts is there's that div into that, which set up, you could argue there was an El Tangonator. Maybe if you're aggressive, you took this candlestick failure here. Don't really see an M to work with, though. Market did dump. And, like Thomas has sort of talked to you guys about this recently. I don't talk about it that much, but I think it's perfectly valid. Is it, if you were hunting a short up here, and this is the way that it's set up, and then it just came sort of screaming straight down, and then, did this FU move off of these lows, maybe you kind of say, you know what, this just didn't set up right. So maybe I'm just going to let this trade pass. I do see, I might even argue that this is kind of a range trader's paradise in here. I see that we rallied back up into sort of reload short zones. It set up this trade, but it really didn't go anywhere, did it? They brought the market back down sort of against these original lows, but and actually this reminds me of an expression that I've heard used on Twitter today. which I think really describes this market. And when we go look at the altcoins, you can really see this. Is this just feels like the sellers are exhausted. It just feels like the market's just running out of sellers. And I think this is probably a really good example. If they really wanted to break this thing was set up perfectly for it to break. But the market just doesn't have any sellers. Maybe we need to back and forth a bit, get some kids. Hey, look at the W. All right, this is a bull. Let's go. All right, okay, we broke out here. Let's buy some more. Okay. And then, the stops, bang, they just blasted them out. And, if we roll over here, then I can say, okay, well, we got some nice M action working. But you can see this market can't find the sellers. Where are the sellers? So, over the short term, I, still like the idea. And I'm running out of because now when we look at the internals off of the hourlies, we did have another range setup here, and it's totally an FU against the shorts. Excuse me, the longs that went long in here. They just blasted them out here. But that sort of played itself out, and here we are back against the bottom end of the range, and now the internals are looking not really anything to write home about, but not really overly bearish. Off of the hourlies. Now I have to go, okay, well, sort of range, wicks and tails like to be eaten, candle body lows. Maybe the longs are getting ready to reload here. So let's keep a close eye on how this behaves. I think if you are sort of direction hunting right now, let's really watch and see how MACD performs here. If we go up and break to new highs, then you know that the bull is still, in charge, and we're probably going to take a nice run up top here. If, however, price does rally and we actually take out these highs, but MACD does not make a new high, we make a lower high, then all right, now we're really setting up for a nice serious test of those lows. And I suppose, it's tricky, don't get me wrong, total advanced traders. But I suppose there's probably guys that, off of trading off like 15-minute charts kind of idea, they're on longs in here and they're just going to risk on a break of this level here. I think that's pretty dangerous. You're sort of you're staring as Sarah's picture here shows, you're putting your mouth right into the jaws of the shark and saying, all right, shark, you think you got me? I'm gonna take a shot here. That just and I don't mean to point you out there, Sarah, but that picture is almost perfect. Right? Taking along here is doing what Sarah's pictures there, but the shark's alive, not a skeleton. So be forewarned, right? That's a tough trade. If anything, I'd almost really like to see this develop a little bit more. And keep in mind, for the botters, I kind of think you got to wait for 33 here to be tested. If anything, what I think, and this is just, of course, my opinion, but I think they're going to paint a top here. And like I said earlier, I think they're going to try and they're going to set up a top here, bring the market down into, and you can see this beautiful tail right in there. I don't know whether we have to go that deep or not, but, that would be like 61.8 mountain man level right there, right? I think they're going to bring the market down, but that actually sets up the long later on in the week. That's just my feeling. So we'll see what happens. Only time will tell. I think internals don't have enough here for us to justify longs. I suppose, the aggressive long hunters might even hunt a bot off of that level and say, well, Brian, my trading plan says we're operating off of lower time frames. You can see 33% was tagged there. So we have 1 kilo, 2 kilos. So I guess I could see the aggressive long hunters coming in here. I don't think the internals support that long idea, so you really got to see these things clean themselves up. But if we go one low, two lows, this holds, we bounce back, we make a third low, which should start cleaning up these indicators, maybe even get a divergence, come after this low, but don't take out this one, that kind of thing. What I want to do here. Let's go like that. Like that. I suppose, those people that are hunting longs. Did I do that right? Or is that too big? I think I grabbed the wrong one. Oh, I think that's the one I wanted. No. All right. From there to there. There to there. And we'll go 25%. Bang. Ah, look at that. Isn't that interesting how it does that? Look at that. That's freaking incredible. So anyway, the point here is actually I can see the market is potentially setting up the next trade, right? I think I misdrew that though. I gotta have a little magnet. Did somebody mute me? That's great. How long have I been talking to myself? Does anybody remember where I was left off? Anyway, about a minute? Really? Oh, Jesus. Start all over. What did I say that was so offensive, Sarah? I've been trying to be on my best behavior. I really have. All right. Anyway, I have no idea where I got cut off, but we'll leave it at the simple fact that the bot here looks like it's trying to set up. You could use an LJ, give me nice market structure on the other side of this trend line to get me long. If anything, the market structure signal came in right at the trend line here. So really interesting tell. And also, too, fascinating how the 25 level of this bot set up right off that level. If anything, like we said earlier, really good analogy of a range traders market right now, right through this area. And if anything, I think it's probably those people at the markets that have been known in the past to maybe push price around mysteriously. I've noticed that they've sort of been told don't screw around with sort of Bitcoin's price through the weekend. And I see this happen quite a bit. I wouldn't be surprised, though, when the adults get back and sort of the official trading gets going again, we see this kind of pattern. We'll see. Only time will tell. I think, if anything, what's good here is we sort of mapped out various scenarios for you. If you're a bull, you have sort of two options, I think. You can hunt longs sort of 61.30 up to 62.60. I do like that idea. For this sort of range RLZ, cheap ass, Brian's a cheap ass kind of trade. Or you can take the more aggressive approach and hunt long setups off of this 6704 area. This happens to be OK coin numbers. Do the same analysis off your appropriate exchange. The levels should be pretty obvious. And you're going to risk about 130 $135 on the setup. That's not bad, $135. That would be sort of like Thomas's 20x kind of trade. If you can take a risk of $135 and you get paid 3-1, you go for 20x. Yeah, you're gonna take a bit of a punch in the nose on the equity that you use, but if you're right, you get paid big time, right? And drinks are on you. So that's sort of what I see. If you're a bear, I think we had cute little shorting windows, right? Nice little inside bars in reload zones. Coming back down against the bottom end of the range, testing the bottom end of the range right now. And I don't know. I mean, you could short this big ass M, but if anything, if you're thinking about shorting that big ass M, I think you got to wait for a nice candle body close below this thick line here. And you can see clearly somebody's not interested in closing her below that line. Isn't that incredible? This is a really, really good testament to, and I keep telling you guys, 30 years into this market, I keep learning things. And Thomas really schooled me very, very well on the significance of these candle body closes with the work that he and I have done with the sort of daily brief videos. I really, really respect that, and a huge, sort of thank you out to Thomas for sort of really highlighting how significant these candle body closes really are. So I think, if anything here, really good example, if you are a sort of higher time frame bear and you're hunting M's, let's get just a nice candle body close below this level here. And what'll probably have to happen to get that to happen is you get some sort of big ugly dump candle that comes down into these levels, and then it's on the counter trend rally. You can see 33% of that move, of that bigger move, is there. 38.2 off of this smaller move is going to be there. Whoops. Funny how it does that. 38.2 is probably something like that, and then 38.2 somewhere there. So maybe we get like a dump into this sort of window here, and then your counter trend rally is your shorting opportunity here. So interestingly enough, I had actually, for the longs, what I would prefer you see, and I guess it's kind of like what we saw here, is you'd actually like to see a big fat fuck you candle, just grind it down here. And of course, everybody's going to shit their pants, right? For the bears, what I think you'd rather see is a nice polite fail here, counter trend rally into resistance. If you want to hunt reload zones off of that range, so be it. The candle body close theory, that's that level there. And then that would be playing the short trade down into here. Does that make sense, guys? Or am I just blabbing? And then, of course, the bulls that are playing trend continuation, they don't want to see any failure here. We want to, the bulls, they do not want to see failure, the trend continuation short-term momentum traders. You don't want to see this shit. All right, what you're looking for is, and you can see they're already bringing her off the lows here, right? But what you want to see is you got one low, two lows, give me a nice third low. Maybe we rally back to the trend line. One more dump down against these candle body lows, whatever. Turn back up. And if you can get that where you get a nice trend line breakout and structure to work with, that'll actually give you the opportunity to front run this bot trade. And I love those. Those are so sick. And if you can get like a nice little W that comes in here, one low, two lows, three lows, you risk against the bot levels, but you got, lots of cushion, but you're also actually front running the bot. So then that way, if this thing just takes off like a rocket, then, if we hit move stop to scratch, well, then you can move the stop to scratch. But because you front run the bot, you actually make a little bit of money on the trade. So I actually love when I see that happen. So if you're a short-term bull, so I think we've given you the scenarios, right? If you're a medium-term bull, you're going to be hunting to try and get long off this reload zone. I don't think that happens until Tuesday, Wednesday kill zone. Give the institution the opportunity to buy in off of here. And what might end up happening is, if we're really lucky, we rally up into here, and then Tuesday, Wednesday, they set up that dump. That's totally possible. And I've heard a lot of people on Twitter and stuff talking about 7,100 needing to get hit. But that might be different given, the cash market. I'm looking at OKCoin levels here right now. If you're a short-term bull, you're looking for this LJ. And I actually could see that LJ setup. It's just the problem is just right now, the internals just aren't there. This just doesn't look clean enough for a nice little trend continuation setup just yet. Okay, well, that sure was a mouthful. I sure hope that helps. I thought it was really cool, sort of final piece to all this. Obviously, and sort of why I'm sort of thinking pullbacks or buying opportunities. If you actually look at the institutional bias, we actually had the short-term moving averages cross back to the bullish camp. So they're actually, this whole short-term moving average thesis is, and the sort of bias of the market is actually supporting a nice little trade location here. And this is okay at about 6,500 or so, which would be against the original breakout in there, which might set up that empire, but the empire just doesn't fire. And if anything, it might even set up a little cheeky fractal where the new bar opens, it goes, takes out the low, and then it just turns around and just ratchets higher. So I do like the fact that the daily bias has turned back up here. That's encouraging, right? I actually feel pretty good about that. So in a weird sort of way, I'm not really the biggest fan of hunting shorts in here. Now, I actually really do like those, the bullish bots, let them set up LJ off of the bullish bot. If you can get like a Davos signal off of LJ off a bullish bot, awesome. Right. And then, if we do have to dump, then that means the trend's back on hold. We're back into a ranging market, and then hunt for your buys against the bottom end of the range. Okay. Whew, that sure was a mouthful. I hope everybody got something to use out of all that. Altcoins, we'll just take a quick boo. There are a couple names that I really like in here. This lumens chart, and what's so funny is I sort of did this as kind of a fun sort of anecdote. I did a study off of IOC about a few years ago now, on the Coinigy shows, and when we did the show, hopefully everybody can see the same thing here. Actually, on the show, I just said, you know what? If we can go break out the old highs, well, really, whoops, that's not what I wanted. Oh, that was weird. Okay, now I've just blown everything up. What did I do here? All right. Okay, let's try that again. Once upon a time, I land far, far away. I went, this really isn't that outlandish of a target. And people are like, oh, you're crazy, man. Oh, you're nuts. You don't know what the fuck you're talking about. You don't know technical analysis. And I was just like, well, if they ever get their act together, that's what the market's sort of suggesting. And we fast forward to today, and look at that, eh? Isn't that cool? What do you think, Sarah? Is that kind of information that you might be able to use later on in your life? I mean, really, one could argue that right there, if you could learn what I just did there, that will serve you for the rest of your life. That's worth the price of the goddamn course alone if you could just learn this. But the problem is that people end up forgetting this over time. But what do you think? I mean, damn. And damn, double damn. So, I did the same thing on lumens today, and people are like, oh, you're crazy, man. You don't know what you're talking about. But it's just kind of funny when you see that. But, if and IOC at that point was very sort of hip. They had a, really interesting promoter guy who was sort of in the music business kind of idea. And I think he made an absolute fortune on this thing. We at TRI, of course, did very well. We still got a bunch of it free on the books, blah, 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 blah. But this, I think, this is just simply playing connect the dots. If this thing is a bull, some levels to consider. And I think I even did it off of US dollars, and I really like this one. This was definitely a rally peak, no doubt about it. Okay. In fact, actually, the market basically sat in that range forever, right? Oh, doink. Whoops. Let's try that again. Right? You can really see, I mean, talk about a narrow sideways channel. And the irony of it all is that this thing was trading away in this time, right? Choppy, 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 up and down and up and up and up and down, right? All this kind of stuff. So they all sort of do the same thing. Hell, we could probably even do this for Bitcoin. And the irony of it all is you could take whatever the highest high is through here. Let's maybe even just do that for fun. Where is the highest high off of this range? Looks like it's like in there, right? There. And you probably should go off of that one, but for fun, let's go off of this one. Jeez, that's steep, eh? And now, hopefully, everybody can see why so many people got so wealthy on these altcoins. But you could go boobity boom, right? And if you're sitting here, right, and there's tons of coins that are doing this, guys. But you can sit there and draw your previous cycle peak trend lines. And then, of course, Brian says, I'm not allowed to buy unless I'm at or below the reload zone. All right. And so then you pull up your chart and you go, all right, well, okay, maybe it's something like that. All right. So maybe I could start accumulating in here and, oh, geez, it went to new lows. Well, if I was trading this bottom, I better get out. All right. If I'm little old lading this bottom, well, no big deal. Just ride it out. Maybe add some more. On the next W, in comes, look at this W, right? Just sick ass. And probably, we could even do like 88.6, good old Leprecha Barks. Beautiful W structure. So, maybe this one you got in and went, oh, okay, I better get out, cover my ass. Don't take too much more risk. Next W comes in and, okay, it's rallying. I'm feeling pretty good. Okay, well, it checked the original breakout. Feeling still free. Woo, buddy! All right, cool. Got my original money back out. Sell half on a double, whatever. Looks like you got about 2 or 3 doubles off here. And then, does it sort of consolidation thing, and then the bull rally kicks in. Right. And the irony of it all is like we just draw some simple trend lines. Did that trend line get hit? That was right in here. And zoink. Nailed it. Nailed it. Right? Isn't that how it's supposed to go? Nailed it. Whatever. Right? And that was just simply from there to there. Right? And boom, Merry Christmas. And actually, it even went quite a bit further, didn't it? And then, of course, is that it? The interesting thing with this is look how it sort of battled at that trend line and accepted it, rallied up above, came back and even checked the trend line again. Said, well, do I really want it? Yep, I want to be a bull. And woohoo, away we go. So, as a capitalist, that's really what I hope you guys are all here as, is you have to leave your mind open, especially if you're dealing with venture capital. You have to leave your mind open to this kind of insane possibility. This is why I got involved in this space. And this is what venture capital does. And this is why these guys are talking about Lambos and all that kind of shit. Is you have to leave your mind open for the future. Now, there's no guarantees of anything happening here. But what do you think? If I had gone and bought, let's say, $1, and let's say I did it here and I just wrote it out. I just, where's zero? I'm going to take $1 worth of risk on this thing. Is that negative now? I don't know where zero is. Somewhere around here. Boom. Did I get paid commensurately versus that $1? And I'm just going to say I'm going to throw $1 at this and see if I get paid. Well, I mean, there's that $1 risk. How many of these things can you get out of this? Oh boy, there's a lot of them, and there's a lot of open space in here too. So, needless to say, I mean, this is the venture capital story. Now, I'm not guaranteeing that this is going to happen, but if this thing is as good as everybody tells it to be, and IBM is basically using it as their flagship product, Internet of Things, blah blah blah. Well, that's just drawing trend lines. Yeah. Again, I'm not reinventing the wheel here. I'm not guaranteeing anything. And then if we apply, come on, you, right? Our reload zones. Right? Brian says I'm not allowed to buy until it's at or below the reload zone. Well, what do you think, guys? Did he do that? There you go. And what's really interesting is, all altcoins are going to zero. I don't know about that. I mean, can you guys see that this was a lower low here? Boopity-boop. And yet this was not a lower low. Boopity-snoo. And I don't know, you guys tell me. Has money been like panic exiting this name? Anybody? How about anybody? Is there anybody in the YouTube or in the what do we call that place? TRI? Is and so there is somebody not exiting. Okay, thank you. I appreciate that. Who's that? Dane. Dane's the only guy over there. I appreciate it, Dane. Anyway, I mean, the most important thing, and this is what really bugs me about Twitter, is that people are looking for, guarantee, slam dunk. Absolutely going to make money, no questions asked. You're OG. Every time you say anything, God, it comes true. I don't believe in that kind of philosophy. I don't think it's healthy. I'll put on the camera just for the record. You can see I'm 48 years old, trying to hold on to as much hair as I possibly can, but you can see it's going. Right. The point is that, oh, thanks, Chief. Point is, you notice I'm not gray, right? I know a lot of guys in my business that they'd not only be bald, if they did have hair, it would be gray or maybe even white by the time they hit like 50 years old. And it's tragic. I want to try and live a least stressful life as possible. So I don't make too big of expectations. Risk management is critical. I never put more than 5% of my money into any one single play. This is basically what I teach all of you. You want to make it nice and easy. I say a nice, at most 2-3% of your stake in any one idea. Then that way, if the whole thing falls apart, you can always nibble a little bit more. You never really get totally, quote unquote, wrecked on an idea. If you're all the way up to 5%, then that's it. You can't buy anymore, and you just got to live with the results. If it means sitting underwater for a while, as I said, I worked in the stock market for 20, 30 years. Holding on to an asset for 2 or 3 years is par for the course in that business. Well, I don't really have a problem holding on to assets. I do fully appreciate and understand that, those people that want to see their account balance go up and they're valuing their accounts in, say, things like dollars or euros on an annual basis, and they want to even maybe make an income out of this, then it's critical that you pay yourself when you are right. And in those particular cases, we want to be trading quote unquote setups. And that means that you have to live by your stop management rules. And if your setup says it's broken a certain level, like off all the sort of lower time frame stuff we were talking about on Bitcoin, if it breaks your level, you got to get the hell out and respect risk. That's just the way it goes. I'm, tickled pink that on the new site, one of my level 3ers is very interested in learning the day trade craft, and he's worked his ass off for the past 6 months. And I think he's getting better and better and better with every day. And he's in the level 3 program. So by the time that level 3 program ends in the spring, I think he's going to be a total rock star. And another one of my level 3ers, and he actually is going to quarterback our sort of day trading group on the TRI site, and I see it sort of humming along. People are very focused on just posting those day trading ideas. You can always come into the lounge and chit chat and tell jokes and tweets and, hey, did you guys see this in the lounge? Totally awesome. But in those particular rooms, I like to see just concentrating on the task at hand. And another one of my level 3ers at the moment is very interested in swing trading. And so we set up the swing trade, just a very simple Tangonator swing trade model. And he's rocking and rolling, working away. And again, same thing. I'll be working for the next 6 months together. I have full confidence in Zach being an awesome swing trade room moderator. And I also noticed Alex. You're really big on the on that swing trade El Tangonator model as well. So if you want to participate with him, I see Alex is here. Alex is also a TA for our level 1 program this term. Just totally rocking it. But if you want to participate in that group as well, I think you're already there, aren't you? I'm order postdating in the day. Oh, so you're day trading. That's cool. Totally awesome. Whatever. Just the point here, guys, is you guys are rocking it. Just all you got, the most important thing, and it's cool that Albert's here because Albert needs to learn this. Nobody has got sort of a copyright on how to be a good trader. It's actually fairly simple, right? You just have to learn the process. And there's a bazillion different people out there to teach, but the key here is you got to show up day in, day out. That's the key to all this. You got to figure out this thing called the process, right? And there's 100 different traders that'll teach you how to the process. I think TRI does a pretty good job at teaching you the process. But the key here is you just got to show up and you have to stay interested. That's half the reason why I like to do these funny shows and joke around and PMA for the win and stuff, because you have to stay interested in this or you just end up losing interest. This is hard work. What do you think, Alex? Do you think that this is a profession? Can you see where you just got to come to work every day and just keep hunting and keep journaling and keep logging and keep trading? I mean, I'm very impressed with the hard work Alex has put in. Very, very impressed. So, and like I said, he's also the TA for the level 1 program. It was funny. Alex is in the level 2 program and he snuck into the level 2. Actually, I'm sort of switching back and forth. I noticed you joined us, Albert. So I wanted our conversations with you. I wanted you to understand what the super value of sort of learning how to actually trade as a profession is, that message of you have to show up every day. And a big part of what we do, PMA for the win, all that kind of stuff, is trying to help you guys show up, and how we have very specific content, specific rooms. And we've got great sort of team leaders, quarterbacks that are helping everybody. I really like how this is all filling out really nicely. Anyway, I'm sort of blabbing here. I've been talking now, I think, for probably about an hour now, maybe even 2 hours. Oops. So I think I'll probably wind it up for that. I hope you guys enjoyed the presentation. Fast forward over the part where Sarah muted me. Maybe times 1.5 or times 2 through some of Brian's rants. It was a pretty long one today, but I hope you enjoyed the conversation. Gave you a couple things to think about in the altcoin space, as well as what's going on with good old Bitcoin. And we also did sort of a higher time frame all the way down to sort of the day trader sort of approach. So giving you lots of stuff to think about here today. Okay, I think I'm talked out. You guys have yourselves a great rest of your day. I'm going to head off to Liam soon. All the best, and bye for now.